Good morning, everyone. So markets are down a bit here. S&P's down 8 points. Yesterday, we got a breakout failure here. And this is what I call a price pattern that has shock value, meaning it happens to create what was the unexpected. And what was happening here was a sideways consolidation. We talked about this over the last few days, where buyers were stepping up on the dip. You can see the bottoming tail bar here. You can see another bottoming tail bar over here. And then a couple of days ago, we had a candle that closed close to the high of the day and up near the high of the consolidation, the top of the base here. And then prices broke out, right? So this is definitely a pattern in an uptrend, sideways into a rising 20 MA, candle that closes near the high. Completely says expectations are for higher prices, and I'm not saying that that was wrong, but there are situations that create shocks, and this is one of them. So when you get a breakout and it immediately fails, topping tail, red candle, closing deep into the consolidation, you are going to get follow through selling to the downside. Now, the question is, can this hold this area? Historically, this type of a pattern does not. But as you can see on the intraday chart, that's what buyers are attempting to do, and that's just the simple, 101 fundamental trading concept of support and resistance. So down here, buyers are going to test that support, and you can see on the 30-minute time frame where prices broke to the downside, and then there's a retest, and it's trying to move up here, but it would have to get through this high right here to really get anything going to the upside that could be meaningful. Now, in this market, it's been a market of, price movements that historically don't happen often, meaning, a break down and then immediately a big rally back up again. But, going to the NASDAQ, and we'll do that here in a second. I showed you a week or so ago, 2 weeks ago, the extent of this move is measured with the prior moves, which were suggesting that, this would be a short-term top. And then yesterday we had not as evident or clear a breakout failure, since it didn't make a new all-time high, but it did clear this little resistance area and then came back in, and it's trying to hold at this support level right here. Now, let me just, where this all started. If you go back in these videos, I pointed out the fact that sentiment had gotten to a bearish extreme. And I was expecting some type of a market correction, and so far that has been sideways. This is the Qs, the ETF of the NASDAQ 100, and these are the futures right here. So during this sideways correction, some of that extreme has been working itself off, yet it has not reached a bullish level. And now with this breakout failure that's happened, it certainly leaves some gas in the tank, so to speak, for prices to move lower if they can clear the bottom of this little support level here. So we'll see how this finishes up in the day, whether this continues to chop sideways or whether this shock pattern is going to create enough selling to come into the markets and push this lower. Now, you probably know that the Dow has been making this advance alone. And, I wrote in our subscription service to subscribers that, there have been historically times where the Dow makes this kind of a move on its own, kind of, as the news media focuses on the new all-time highs and the Dow is moving up, and this is what is being reported and mentioned. However, they don't mention that the other markets are not moving, and it just kind of has the effect of sucking in the Johnny-come-latelys. And now we've got this topping tail bar reversal here in the Dow futures, and we're getting some follow-through this morning, and we'll see if that breaks lower. Now, in addition, we reviewed the fact that the transports have been showing relative weakness. Historically, that is a bearish sign for the markets, and they have continued to do so. And the Russell 2000, which had been chopping around and showing relative weakness, finally broke out to the upside a couple of weeks ago, and now it's immediately failed, coming down to major support. And yesterday there was a topping tail as well. And all of this suggests that lower prices are ahead. And we'll just measure as time goes on the extent of that and see if our market internals may reach a bullish extreme. So with that type of an extreme, accidents start to happen in the markets, meaning stocks start to break out and fail. They start to correct in a deeper way. And, we have been starting to see that over the last couple of weeks. And I expect that we're going to see a lot more of it until this is over. Good trading, everyone. Be careful out there. Market corrections from the point of view of the broader markets never really show the devastation that can happen in individual stocks. So if you're in a position that isn't working out, if you haven't adhered to a stop loss, protect yourself, exit the position, buy put options. Don't lose a lot of money, So good luck, and we'll talk soon.